Joining us now to discuss the market even more is Hashdex's head of US and new markets, Bruno Ramos de Sousa. Welcome, Bruno.
Thanks, George. A pleasure to be here.
Glad to have you. So first and foremost, what do you make of this week's strong move? Does the round number of $30,000 matter as much as people claim it does?
Not really, but it's nice. That would be the short answer after so many interesting months that we had. I think that this year has been great for Bitcoin prices, obviously. But I think the overarching theme is that the discussions that we had last year, or up until December maybe, around crypto companies going bust and everything happening with, from 3AC to FTX, we're finally in a stage in which people are back to discussing the importance of Bitcoin and crypto more generally to finance and to technology. And so it's the discussion we've been having with clients in the US and Europe and other places tend to go back around that. And a few months ago, it was just problems with the crypto ecosystem. So that's certainly refreshing to be talking again about price action.
Right. So let's talk a little bit about the Fed. I think you kind of alluded to it a little bit. The Fed raised rates. They're committed to fighting inflation. That's supposed to be bad for risk assets, but Bitcoin has surged in 2023, as we've said. Is Bitcoin risk off again?
It's not risk off, but when you talk to some private bankers in different countries, they're already pricing in the idea that interest rates will fall again this year, right? So it doesn't really matter what happened in this high core, a few weeks ago. It's actually where the trend is going, and what people are seeing is that the trend is going back to what we had maybe last year or a couple of years ago, in which you have lower interest rates, right? So with that, risk assets in general tend to benefit. Bitcoin being, the canary in the coal mine of risk assets, that it moves faster in both directions. It moves faster up and faster down when things start getting a little bit different. So that's probably what's happening, and you do see it in other risk assets too. It's just that Bitcoin's more liquid and easily accessible than VC investments, or reacts more faster than equity.
Right. So you mentioned your investors just briefly there. What are investors telling you guys at Hashdex when it comes to their Bitcoin investment thesis? Are they looking at it like a gold-like asset? Are they moving the rest of their portfolio to a defensive allocation and coming to Bitcoin for the aggressive bit? Do they just see sharp ratios and like the number and risk-adjusted portfolio? What's the main thesis they're coming at you guys with?
Yeah, most of the investors are very pragmatic in looking at the asset and understanding the possibility that Bitcoin becomes something a lot larger than it is today. And that's actually their trade for the long term. We have very few investors who are in for short trades. They're actually in an educated investment around the possibilities for the ecosystem, talking about crypto more generally, but Bitcoin specifically, an asset that has no central bank behind it, what it can mean as a proto store of value, as a currency that might be an alternative to currencies in different places. So it really is, investors are a lot more informed around Bitcoin now than they were in the past. And then when you talk specifically about the moment, although some, of course, are still waiting for more signs of recovery, and we always have folks that want to see 45, 50,000 before they feel confident coming back. Others recognize this as a possible interesting entry point, especially when you look at what happened at the year. But sometimes they're seeing their portfolio hurt with different assets, and you have Bitcoin going up 70% or something in 2023, and say, okay, maybe this is time to dip my feet back again. So that's the moment we're in time. That's what we've been discussing, and it's really around, is this the right time to come back? So it's a conversation that's a lot better than, again, 3 months ago, where people, there's no bottom, the world is melting. So it's let's say it's back in trend. People are like Bitcoin again, which is
Right.
always great.
Right. So Bruno, you're the head of U.S. markets at Hashdex. So any discussion about the U.S. market is incomplete without regulation. Yeah. Elizabeth Warren's anti-crypto army, something to worry about. What is your viewpoint on just regulation in general in the U.S.?
Yeah, so I'm a lawyer originally, capital markets lawyer, worked in a large U.S. law firm, so understand the ins and outs of what's happening in the U.S. From a broader perspective, it's a wasted opportunity that the U.S. has been taking the approach it has in the past few years. It's lost dominance and relevance in many interesting crypto sectors, from tokenization to security tokens to ETFs and ETPs. The US is really behind everyone when you talk specifically about ETFs, ETPs, and funds. So we think it's misguided, and that hurts. That hurts the US, plain and simple, right? What we expect is a lot more rationality in the discourse, because we know under the guise of protecting investors, what actually has been happening in the past few years is actually pushing investors into unregulated products and platforms, which in the end led to things like Celsius, like FTX, and so on and so forth. And we've been having this discussion for several years. I think it's about time that luckily there's a lot of people in DC that acknowledge that this is a strategic sector that has an importance for the US, and a bit of the looking at this as pure tech, and understanding that the US has to be a leader in tech helps guide the discussion. Okay, this is tech, but it does have a financial component. So how do we deal with the financial component without throwing the baby out with the bathwater? I think that's what's missing a little bit. And hopefully this is a year in which things come back a little bit more into a more rational scheme, especially when we have a federal bill regulating exchanges and the Luminous Kilogram bill. So I think that's one of the things we hope for this year. And of course, into that discussion around the spot ETF, which is long overdue, but we think it will come at some point, right?
Right. So on the topic of ETFs, you guys at Hashdex have the Bitcoin Futures ETF, and that AUM has grown a lot this year. How much of that can be attributed to Bitcoin's price movement versus new funds flowing into the ETF itself?
Yeah, a lot of it is price movement. We see initially retail investors, they respond to prices faster than professional investors. The exception for professional investors would be really hedge funds, macro hedge funds that understand Bitcoin, understand crypto, and want to trade on specific windows. But a lot of it is driven by price action. It has been the case with ETFs globally, with crypto ETFs globally, right? So that's a key factor. And then we've seen this movie before in different cycles. What happens once you start reaching all-time highs and you see relevant traction for several months, which is happening now, people start paying attention again to these products, right? And we think these and other regulated products, they're the best way to invest for the majority of investors. For those not willing to deal with private keys or different taxations and things like that, it's just an easier point of access. And we believe the trend globally, just like with gold, is that most of the investment will be done through ETFs and regulated products. So it's interesting to follow that in the US, not only with our ETF, but other ETFs out there.
Got it. Bruno, that's all the time we have for you today. Thank you for joining us.
Thanks, a pleasure.
That was Bruno Ramos de Sousa of Hashdex